think everything's good to go. I think we're already here. Dude, the gang's all here. Everyone made it. What's up? Hopefully my voice is sounding good for all y'all coming through here. I'm a little bit frantic. I was putting my spreadsheet together for you guys. The Dividend Fireball spreadsheet. So how's my voice sounding, by the way? In the past, some of you guys have said there's been issues with my sound. What's up? By the way, if you're just joining me, my name is Russ. I have this little channel called Dapper Dividends, and I'm excited to share something with you. So I see Ryan Williams is in the chat. So this whole thing stemmed from, let's see. All right, good. My voice sounds good. So this stemmed from a group chat I have with Ryan, Ari Gutman. We should ask him that. And the one, the only, the man of mystery, Darth Dividend. And I was kind of joking around with them about, Ryan's dividend snowball videos doing so well. And I was like, you know what? I'm going to be the contrarian here. I'm going to do a dividend fireball video. And I was like, but I just need to figure out what that is first. So I had assumed that it existed out there in the world. I Googled it. I went to YouTube, nothing on dividend fireball. I couldn't find anything. So I was like, okay, I'm going to just create a term, dividend fireball. And what the dividend fireball is simply this. It is just when you have a stock that has a 20% or greater dividend raise that just happened, a 20% or greater 5-year dividend compound annual growth rate, and a 20% or greater 5-year stock performance, meaning the stock price, just the share price has gone up. Now, this may be, this could be linked, it could not. I'm just thinking it's interesting, and I've put together a spreadsheet down below. Ethical bribe, we call it in the industry. Give me your email address and you'll get the spreadsheet. That is almost done. So I have the dividend fireballs on there, which I'll show you in a second. But as of right now, I have 43 potential dividend fireballs, meaning that they don't meet that criteria as of right now. So yeah, the Darth Lord of Dividends. Really interesting term. I'm going to start using it. If it's kind of funny, if you go to Google now and type in dividend fireball or fireball dividend, what's at the top? The thumbnail for this video. So kind of a fun thing that, this is going to be our term. This is our little term, dividend fireballs. And what made me think of it was what KC had turned me on to was Next Star Media Group, ticker NXST. And they've been a bit of a fireball. So I guess if I had to give you an elevator pitch for a dividend fireball stock, it would just be a company that has really quick dividend increases, and then the share price follows up along with those really hot dividend increases. There you have your fireball. So with that being said, I'm just going to show you guys the screenshot real quick, or we'll go over the spreadsheet for the dividend fireballs, and then let's see. So yeah, I'd love to know what you guys think about it. And here we go. This is the spreadsheet you guys can get. Let's see if we can blow it up a little bit here. Of course, not cooperating, but you guys get the point. So where is it? Why am I not? I don't know. I'm going to make it a little bit bigger. I don't know how to make this view. Oh, here we go. I told you guys I would figure it out if you just give me a minute. Let's see. I need to make myself smaller though. So these are dividend fireballs, and let me muddle through this here and put myself off the screen so we can get it nice and big for all y'all. All right, let's blow that up just a little bit bigger here. There we go. So there's currently about 19-ish, and I say ish because if you see the red boxes here, 2 of them barely missed out on being a dividend fireball, which was Lowe's and Visa, 2 really great companies. But yeah, I mean, it's a fun little thing where we got Devon Energy, Pioneer Natural Resources. By the way, If you hover over the ticker symbol, I put links to Seeking Alpha on all of those. There's also a link in the description below. If you'd like to save 50% on your first year of Seeking Alpha, give yourself an early Christmas gift, birthday, Hanukkah, whatever else weird holidays you might celebrate. Not saying those are weird, but it's an affiliate link. I'll get a few bucks hit back at no extra price to you. With that being said, it's just, this could give you some ideas. And companies that are raising the dividend quick doesn't automatically mean that they're good buys. But obviously, as you can see, if we sort this, Devon Energy, of course, given a 369% dividend increase last, is just ridiculous. You don't expect that to continue on, but for sure, though, it's something more like Visa with 20, Landstar with 20, companies you could look into, in tying in with the fireball. Where there's smoke, there could be fire. Hopefully it's not a dumpster fire, and hopefully it's the tail end of the fireball that you're smelling and seeing there. And my candle just went out. How about that? So those in a nutshell are the dividend fireballs. I'll just go through them. ASML, Tractor Supply Company, shout out. I just bought some hydraulic equipment from there. Rio Tinto, my only. Nexstar Media, Advanced Auto Parts. That one I would be careful with. The free cash flow payout ratio is currently 141%. So I would keep an eye on AAP. Old Dominion Freight Line, Lowe's. Again, I should have put the box around Lowe's, and we see I put it around. I put it around Best Buy. Oh no, that's because I know what we did. Hey, yours truly is still getting used to this stuff. So it was because the box was on that cell. So that'll be changed. Hey, little bump in the road. This is what's great about being live. Invitation Homes, Innovative Industrial Properties. Again, a lot of issues with them. We can talk about them later if you'd like. Best Buy, Pool Corporation. Never looked into them before. Goldman Sachs, Cintas, Landstar, and Visa. And again, I'm not going to click on the potential dividend fireballs. I have 43 of those in there, and I still have a few more to add. So as soon as this is over, I didn't want to push it. There'll be a few more, and you guys can click the link, sign up for it, and see all of the potential dividend fireballs. And simply all that it was they met almost all the criteria. There was one component missing. So they are still companies that we could look into. And those, ladies and germs, to quote Mr. Tim Ferriss, are the dividend fireballs. So I'd love to know what you think. Interesting. Does it make sense? I know they did Motley Fool, right? They did the Dividend Nights, which was, right? It was like 10, 10, 10. Does anyone remember exactly what they were? I think it was like a 10-year CAGR of 10%, 10 years of dividend increases, I believe, and then something else, 10%. I don't remember off the top of my head. But all right, I'm going to get to you guys. I'm going to beat, I'm not going to be like my buddy Ryan here, who gets 15 minutes behind in the comments. And that was quick, man, right? Super quick, super easy, and fun. It's fun, dude. You know what? Investing should be fun, right? All right, what do you guys want to look up? Is there anything you want to know? Ask me some questions. Ask the community some questions. All the people in the comments, thank you for being here again. Given some of your time to spend here and chatting with all of us, hopefully with plenty of like-minded dividend growth investors and just investors in general. I love it. And what are you buying this week? Start it off there. Interesting. What is your top purchase? I know last week Jeremy and I went over, which I did buy some Life Storage. That was my top pick. His was Brookfield Asset Management, ticker BAM. I didn't buy any BAM yet, but let's see. Let me get down to a question. I'll just say good morning to everyone that said good morning. And let's see. Questions. How about it? I love you. You guys are talking. Ryan talking about peanut. Oh, by the way, if you didn't see my last AT&T video, my cat Louie all of a sudden decided he needed a lot of attention and he needed it right now. And the little lovable annoyance was there for a minute. Frank, Southern Copper, interesting company. Again, I have never dug into them. More of a Yankee Copper guy. Hey, watch it, Shamir. You're further up north than I am. So if I'm a Yankee, what does that make you? Just saying. If we're just going off geography here, let's see. I agree with this. Tutomi, more red than market, buy more stocks. And funny thing, I will agree with that, dude. I've been hesitant and I've really slowed my buying because I keep waiting for the market to drop and it's just not cooperating. But you know what? I mean, it's fine. And this is why I bought Life Storage, forced myself to buy it at like 108. Oh, we need to do news. I'll do news next, some dividend raises. I bought Life Storage. I bought a couple more shares of Toronto Dominion Bank, ticker TD. And of course, I'm buying 1 to 2 shares of SCHD. And hopefully, if it pulls back, I'll go a lot heavier. But I'm sitting on a little bit of cash and I would like to buy more. We'll start with Casey's comment real quick because I know Steve requested that we do a little bit of dividend news. So there was a ton of increases this week. And what I'm going to do is I'll go through them kind of quick. You can go back, pause the video, read the little blurb that Simply Safe has to say about them. If you'd so like that, Shamir, DNUT, D-Nut. Krispy Kreme, though, is D-Nut, right? Isn't that Krispy Kreme? All right, here we go. We are going to do the dividend increases as soon as I can figure out what I'm sharing. Here we go. Ba-da-ba-ba-ba. Starting on the 31st, UPS. Shout out UPS, raised their dividend 6.6%. Then we had Valero Energy. Ticker VLO, raised that dividend 4.1%. Capital Southwest. I've never looked into them. Raised their dividend 1.9%. There was a note about Hasbro thinking that their dividend profile remains strong. Crazy. 4.54% yield for the toy manufacturer. Dude, I love it. As somebody, as like someone, I was going to say an adult child. Yeah, Nerf, Transformers, My Little Pony. They own Hasbro. Eversource raised their dividend 5.9% for their 23rd consecutive year. Dude, they're a couple years away from being an aristocrat. They don't think that J&J, they put a note out on J&J and the Texas two-step. We'll talk about that in a minute if you'd like. What else do we have here? BCE. I think of them as like the AT&T or Verizon of the North. 5.2% dividend increase. And they've paid dividends every year since 1949. Does BCE Shell, formerly Royal Dutch Shell, ticker SHEL, raise their dividend 15%. And while that seems like a lot, it's still 40% below their pre-pandemic rate. So they got a little bit ways to go to increase there. Of course, we're missing this here. Stupid Simply Safe or my computer. I don't know. Anyway, Brookfield Infrastructure, BIP, raised their dividend. Oh, I'm plugged into the router. Come on, guy. 6.3%. CME raised their dividend 10%, which is their 9th year. They are almost, let me do this. You know, and I don't know why this happens, everybody, but see, there we go. Just, I don't get it. Anyway, continuing on with the program here, because we got a lot to get through. CME raised their dividend 10%. They are almost a dividend achiever. ICE, which is a financial exchange, raised their dividend 11%. Told you, dude, there was a lot. Gilead, 2.7% increase, which is their 6th straight year. We had Polaris with a small little 1.6. They are a dividend aristocrat. Brookfield, another Brookfield, they have a web of companies. BEP, 5.5% increase. Church and Dwight, they are fueled by baking soda, 3.8% increase for their 27th straight year. And Cigna boosted their dividend 9.8%. And I do want to show you guys one last thing here, which this will tie into the Fireball. Pause these if you want these, but Nexstar, I wanted to show you how, here it is. Look at that. My dividend annual increase, my patty increased $18 as a result of Nexstar Media's 50% dividend hike, which was huge. And again, they've been giving some pretty big dividend hikes. They are currently 24% 5-year CAGR, and 50% obviously was their last increase. So we got through a bit of the news. We did it. We made it. I'm back. And I will start with, as I said, oh boy, we got some sun. Look at this. I am yellowed out. Wait, for the 5-year return, is it based on total performance? Just total performance. So I just went to Google, typed in their 5-year performance. So it's just their total performance. It's not CAGR on that. So yeah, I should have made that a little bit clearer. Thank you for making me clarify. And let's see. Can I add the SSD to the Fireball list? Hey, I guess, man. What do you mean? Adding Simply Safe to the Fireball list. Not sure what you mean. Let's see. I did catch the Starbucks earnings. They did well in the US. What was it, like 10% same store comp growth? But China and the rest of the world was pretty negative. I want to say like 11% or so. I was working. Quarter app, QARTR, I think it is. I've been using it a little bit more. It's free and it's really great for earnings calls. As soon as an earnings call pops up, I get an alert on the phone. You do have to follow the stock. So you have to put in what stocks you want to follow, or you can look by the calendar, but there's just tons of companies that I don't even know. But I did listen to it. I listened to Starbucks. I listened to Procter & Gamble recently. A couple more I listened to. I'm looking for PepsiCo. PepsiCo drops this week. Let's see. KC's finished front running at core. That's one of her picks, ATKR. So she's going to be buying more Franchise Group and HROW, which is a health, not care company, right? Pharmaceutical? I don't remember. Chris was front running AI stocks. Nice. Yeah. What do you guys think about Starbucks? It's too much, I think. I'd love to see it back again in the 80s. I don't know if we'll get there. Yeah, Investor Day, Laxman Narasimhan, I forget his name, but Lax is what they call him. He was the former CEO of Reckitt Benckiser, right? Reckitt Benckiser, which is like, some people have equated them to the Procter & Gamble of Europe. So he's, not exactly apples to apples, but I think they were fairly successful. I've never dug very deep into RG. Oh, I don't remember it. Does anyone know off the top of their head? Let's see. Here we go, Kevin. Do I like Broadcom stock for long-term dividend investing? They seem to be good. I've talked about this with KC and a lot of you guys too, with the semis. It's hard for me to understand the moats and which one is going to be dominant in 5 years or 10 years. Kind of like equate it with Procter & Gamble or Walmart or McDonald's. Just really, really simple businesses to understand. And we know that they're going to be dominant unless something crazy happens. But as far as the semis, I think we're going to see tailwinds for their industry, right? We're going to see the whole sector being raised up, which is one of the flaws, which you could say about the Fireballs is obviously just because a company raises its dividend a lot doesn't mean that the stock price is going to follow. It could be sector headwinds or tailwinds that are also helping that along. But Broadcom, I mean, I'll share it with you since you're so nice to ask, Kevin. Why don't I give just the really, really quick rundown here of Broadcom. It's a popular dividend stock. Everybody likes them. Let's see. ABGO. So they have a dividend safety score of 67, which is safe, 3.8% yields, and they've had some pretty nice dividend growth, 12%, 29% 5-year CAGR. So they almost would qualify as a Fireball, I would say. But yeah, I know they have a really low, let's see. Now remember these numbers here, like when you see that the dividend yield is below the 5-year average. Again, these are all lagging numbers. It tells us nothing about the future. It can give us some indication of the direction things are going. But yeah, their free cash flow payout ratio, only 43%. So super low. They should be able to continue raising that dividend for quite some time. And you know what? Just for my own, let's get an intrinsic valuation from Alpha Spread. And it just makes it super simple going to something like Alpha Spread. And someday, I know Ryan's working on his spreadsheet. And here we go. Type in AVGO. We were looking. It's always on Apple. All right, Broadcom. Here comes Broadcom on Alpha Spread. Holy cow, look at that. They give an intrinsic valuation of $626, which could mean it's about 5% undervalued in the base case. And in the worst case, they're saying about $500. So about 16% undervalued. And let's see their competition here. And just scroll down a little bit. If anybody wants to go back and pause this, knock yourself out. Some Wall Street price targets. Here we go. Competitive landscape. They'll put, Broadcom, NVIDIA, Texas Instruments, and then you can see which ones are overvalued that they say are undervalued. And Intel, God, that's one I'll probably move on from if and when I can get to my average cost. What did I want to see here? Those are their suppliers here. Ownership. So they have had 196,000 shares bought and 42 million sold by insiders in the last 12 months, as you can see right there. And yeah, that's kind of cool. It'll show us who's selling to. It'll show us the C-suite, the executives that are selling. So anyway, that is Broadcom on there. I hope that helps you a little bit on your investing journey, Mr. Kevin. And, it's funny to see that $600 price. You can't just look at price, because I know, and I'm going to probably do some videos on it in the future just to show like a $25 but I'll always point it out. Something that may be $10 or $20 does not mean it's cheap. And there's a bit of prevailing wisdom out on the street that, man, how does it go? Casey probably knows if I'm going to butcher it, but there are more overvalued stocks that are under $5 than overvalued stocks that are over $100, I think is how it goes. So price does not, just in and of itself, the price does not mean that something's overvalued, just looking at a price as in something's over or under $25. So, and especially when we're able to buy fractional shares, there's no excuse. Berkshire Hathaway, the A shares, they could be if they were $200,000 a share right now, that would be pretty undervalued. But some people don't think of it. They see the 200,000 and they say like, whoa, that's way expensive. But in the grand scheme of things, that does not always equate, right? Let's see. What are you guys talking about? All right, here we go. Let me take a sip from my dad mug. It's funny, when my kids got me this mug that says dad, I was like, who is that? I was like, whose mug is that? They're like, that's you. I'm like, that's not me. I was in high school a few years ago, it feels like. I'm going to be 45 in April, for all you guys that are wondering. A little bit of trivia. And I'll get to this. That's a great idea. Are you in about or near Chicago, Harsha? That would be cool to pick a place and just, hang out, chat, talk. I don't know where we'd go, some central location. That's a good idea. I like that. I might have to see who's interested. I know there's several of us here. I know Cody from Citizen of the Year is here too, but let me do this for you, my friend. Let me check. Valet. I know, Valet's been pretty, I know there's a lot of people that want to know about Valet. So let's see. I'll just do the Simply Safe. I don't think I've really dug into them. So I'll try and do this in about a minute. So for those of you that are not interested, let me hide your comment here just to make it. Sorry to show you the stream section. Okay. Yeah, 111% dividend growth. 1.73% yield. Aren't they from Brazil? I think they're a Brazilian company, right? Let me see. Yeah, formerly known as Companhia Vale de Rio Doce, and changed its name to Vale in May of 09. Yeah, headquartered in Rio de Janeiro, Brazil. Now that's interesting. I haven't gotten to them yet. Like I said, my dividend potential fireballs probably needs about 15, 20 minutes more worth of work, but interesting. 111, 67% CAGR, 20% 20-year CAGR, because they've just had, as you can see on the screen, some sky high increases. And I think there's going to be foreign exchange in this. So they don't have their dividend growth streak because it's too hard to figure out for people like me. Free cash flow payout ratio, 58%, but they are an oil company, right? Or they're not a utility. So that's not terrible. I mean, it looks like they should be able to $12. So look at it this way. Currently, they have $12.60 of free cash flow per share, and they're paying out 30 cents annually. So just off those numbers, if that is all correct, again, these third-party sites, take them with a grain of salt. If that is correct, then they have no problem paying that dividend. Their shares outstanding, they've been buying back down to 4.82 billion. Sales coming down just a little bit. And let's see, 43% return on invested capital. That is really interesting. Only 19% net debt, which has come up a bit. Really healthy ICR ratio. And we will pop over to, what are we on? We're on alpha spread. All right, let's look up Vale. See, that went pretty quick. Let's see what they give them. Valero, no, not Valero Energy. Come on. Why is it not popping up? Oh, alpha spread you. Vale, what if I put an S? A. I don't understand why it won't come. Oh, there we go. Vale SA. Oh my God. Here we got it. We did it, everyone. They're showing $19.62 is their intrinsic value. So they could be about 12% undervalued. And the worst case, about $6. So the reason we sometimes look at worst case is there's a lot of super investors that will look at their worst case scenario for a stock, which could be 5 years or 10 years of negative growth. And they'll try to buy 10% below that, meaning it's giving them a really wide margin of safety. And Vale looks really interesting. I don't terribly know much about the Brazilian government, and that there's always a risk with certain foreign governments, and especially some Latin American countries, right? That we always have to worry about. I think Brazil's okay, right? It's not like going the way of Venezuela. I don't really know, but that would be something that you would have to look into and make sure you feel comfortable with, is if you're comfortable owning a company that is headquartered in a foreign country like Brazil. And I don't follow the politics there, so we don't know what the situation is like. Is CVX undervalued at the moment? Let's find out. That's a popular one. We'll just go ahead and look at the alpha spread for CVX. I know this one will come up easier. Let's see. Good old Chevron. Man, I bought them when they were cheap. Yeah, this is showing they're about fairly valued, $177.26. And the base is what? $144. And mine, oh, you guys can't see this. Let's see. I've done really well on Chevron, and I will show you that here. Yeah, did anybody was anybody else lucky enough to pick up Chevron when it was stupidly cheap like I did right here? Let's see, it's got my so they give them a 90 dividend safety score of 90 for Chevron safe. Here you go. So let me blow that up a bit, or not. Oh, there we go. Oh, whoa, too big, guy. That's not what I wanted to show you. What? I don't know what I want to show you. Where's my shares? There's my shit. There's my shares. There's my chippy. That's what I wanted to show you. Dude, I'm up 99% on Chevron. My average cost, so I have a 7% yield on cost, and my average cost per share is $84.85. And I'm only getting $90 from Chevron per year. So that's I don't know if any of you guys got in that cheap, $84 a share on Chevron, but and again, do you guys struggle with price anchoring? Because I have a problem where even though we're seeing it could be undervalued at the moment, I'm like, dude, how is buying it at $84 a share? Like, I want to buy more of it there. Let's see. Mo has been a laggard for a long time. Yeah, we'll see. I think their dividends is going to be okay because it's weird. They keep it growing. They keep generating more money, but they're not really selling more, right? So it shows that they're able to raise prices, and I think they're going to move into cannabis eventually, right? That seems logical that they're big enough that when it becomes legal all across the country, that they'll because Mo only operates in the United States, so they're going to need every country, every country too. Every company is a living, breathing entity, and any living, breathing entity's first order of business is survival, right? You want to survive. So I think they're going to do what they have to do to survive, and it's just a matter of time before the pot, as my grandma used to call it, is oh, dude, everything was the pot. We'd be in the car and there'd be somebody zip, speeding like a lunatic. She'd be like, he's on the pot. Like, I don't think he's on the pot when you're going, 80 miles over the speed limit, Graham. That's a different thing that you put in your body does that. At least I've never seen anyone that's smoking weed all hyped up and speeding around. Nice. But United Health, are you worried at all about the pushback into Medicare? I mean, that's one of my concerns with health insurance companies is the government, the government in the United States pushing back and saying like, yeah, we're going to negotiate, right, with Medicare. They're renegotiating all those terms, I think. Trevon, what's up, man? Your thoughts on Lind or Air Product Chemicals? Which one is better? So this is a really interesting thing. I probably should have dug into both of those since this is my line of work because they supply gases, air products. So just all the things that Lind, there's a company we work at that's owned by Nestle that makes pizza. It's called Nation Pizza up in Schaumburg, Illinois. And they have the big Lind towers and they keep bringing I should know what it is. What is that stuff? Liquid nitrogen, I think it is. Something like that. Whatever they use, because I think they flash freeze the pizzas, which is funny because, and this is no offense, but when I walk through there, I feel like Willy Wonka because for whatever reason, I'm 6'4", and most Mexican people are not 6'4", and they hire a lot. They work 3 shifts. Not that great work there, but they hire a lot of Mexican people. So if there's like a shift change and I'm walking in, it's just, I feel like, come with me, Willy Wonka. It's just nobody's like even like up to my shoulder. Just feels like I'm with the Oompa Loompas, but instead of candy, they're making pizzas for you guys. But they flash freeze the pizzas. It's kind of cool, man, to watch these conveyor belts and just cranking out pizza. Anyway, how am I getting on the pizzas? How we got here from Lind, but it's fun, dude. I'm crazy that I love to look at stuff like that. But yeah, Nestle did buy Nation Pizza a couple years ago. I think they make Giordano's, right? It's not delivery. Not Giordano's. DiGiorno. It's not delivery. It's DiGiorno. They make DiGiorno pizzas. You know what I'll do for you, Trevon? I'll just do a really quick. We'll let Simply Safe decide the between Lind and APD here. I think it's going to be APD. I think they are the little bit better for you, man. For you, because you are my friend. We'll start with Lind. Lind, they get a dividend safety score of 99, so they're not going anywhere. And yeah, so here it is. They offer atmospheric gases, including oxygen, nitrogen, argon, and processed gases such as carbon dioxide, helium, hydrogen, electronic gases, specialty gases, and right there, you see that one, acetylene. That's what I use for my torch when I'm torching things. So Lynn gets a 99, and then let's look up APD, which I think is also a 99. You son of gum. Come on. You could do it. Come on. Why do you do this to me when I go live? No problems. No problems at all when I'm not it's like a comedy of errors. But you guys love it. 95. There you go. Both very safe. Air Products has a little bit higher yield, but if I remember right, I think APD's free cash flow payout ratio scared me, or I guess not. That's weird, in the thousands. 2%. I don't know what's going on with that because they show below 60%. Something a little cattywampus going on with Simply Safe. So we'd have to look into that. But there you go. If you wanted a tiebreaker, Simply Safe, take it with a grain of salt, says that Linda is the better one. Linda. I don't know who Linda is. I still like that, man. I'll think about that, Harsha. Yeah, you probably answered me. Ryan falls into this too. When he'll ask a question and then he gets to it like 15 minutes later. It's just the nature of the beast. The beast. What does my wife call my cat? The snuggle beast? Oh God. These women with their nicknames for the cats. Yeah. So I'm really considering that because, and this is hard to say, but when I'm thinking and I'm talking honestly about Intel, I stepped back, and it's easy to buy and own when something's going up and everybody loves it. But what do I know about the tech? Me personally, other people may know, but I know that they're getting government funding. I know that they're trying to fab. Which means creating chips. They're going to compete with like TSMC and ASML. No, ASML makes the machines, like the lithography machines. It's a lot to understand, but quite honestly, if I had to compare Intel to a Procter and Gamble, I'm very, very certain that Procter and Gamble is still going to just be a beast, a dominant beast in their sector in 10 years from now. McDonald's. I just drove by a McDonald's and I was sitting at the stoplight. I counted 9 cars in the drive-thru, 9 cars. And it was maybe like 3:30 in the afternoon. Crazy on a weekday. McDonald's is not going anywhere. I think they said that they're going to open up 1,900 new stores. But Intel, what we can say about McDonald's is that they offer cheap food. Food is going up everywhere. And yeah, they're raising their prices, but you can still get a decent amount of food at McDonald's and not have to pay, $30 for my mother and father-in-law got a pizza for the two of them. And I think it was almost $30 for 2 people for one pizza. And I know people buy bagels, 4 bagels for $30. But McDonald's, what you can get for $30 is going to be more than 4 bagels. So McDonald's, that's part of their brand. That's part of their moat, what they're able to do. And I can see that and interpret it and say, oh, I don't eat the food, but millions of people do. But I don't know what inherently makes Intel, their technology, superior to that of AMD or Qualcomm or TSMC or Broadcom. Any of these, or even Texas Instruments, some of their products. I know they make the calculators, which is a small part of their business, but that's my thought on why I'm likely going to get out. I'll hold it. It's a risky proposition, and it makes people probably say, well, you should get out now. But those are my thoughts. And this is my evolving as an investor going forward, is that I really want to hold stuff I can understand. And I'm very confident, and we may be wrong. Of course, we may be wrong. I mean, even Warren Buffett, one of his biggest mistakes was Dexter shoes. He knew that there was competition with shoes coming from overseas, but he thought that their superior quality and craftsmanship, and that they were just going to have that moat. But he was wrong. So we may be wrong, but at least you understand something and things will happen. But I honestly don't understand what makes Intel's technology superior to that of another chip manufacturer. I don't. So that's my thoughts. And again, there's probably people that do understand that. And then God bless you. Then you should pick one of those companies. But if I had to invest in the semis, I think if I really, really wanted specific exposure, I'd probably just do one of the semiconductor ETFs and just buy them all, make it easy. But Harsha says UNH is the worst insurance company. Yeah, I don't think we've ever had United Health. And let's see, I love it. Thank you for sharing this. Folks are generally advised not to choose UNH Medicare supplement plans by their healthcare providers. I don't know that, and hopefully that's accurate, but very, very interesting. Yeah. See, look at that. Exactly. So I had mentioned, if you're just popping in, that if Berkshire were at 200,000 a share, I actually thought of that too. I was like, I might take out a second mortgage to buy a share, because it's a perfect example of why you cannot just look at price and say something is expensive or cheap just on the price. Great point, Casey. Yeah, like half their, yeah, and I just picked that number out of thin air to illustrate, but yeah, and you'll see it. You'll see and it's hard, and I'll have fun with it too. I'm thinking about doing dividend stocks under $20 or something, but kind of using my criteria, looking for something that is cheap, that's under $20, not just it's under $20, but crazy overvalued type thing. Yeah, that's Ryan's thing. He calls Mo the triple threat. The triple threat. Buying Mo lately. Yeah, I think they're going to be okay. Again, they're going to survive. They're going to do what they need to do. They're not just, unless they're incompetent. And again, that's why sometimes incompetent people do run businesses. So we want strong businesses, because as Big Buff Dog and Charlie Mo say, that at times incompetent people will run businesses. So yeah, 1.5 hours from Chicago in May. You know what? Let's email me at russ@dapperdividends.com and we'll set something up. I don't care, maybe I'll get Cody to pop on too, but he's incognito. So I don't know if he'd be down with that, but obviously me, you guys see me, you see me. Let's see. Let me get out to a couple. Can I check out Merck? Jack Black, for you, Jack Black, do a kickflip. I'll do a kickflip and I'll check it out. Yeah, Merck's solid. I did a short on the healthcare companies, and Warren Buffett says the secret for how he buys healthcare is because he can't understand the pipeline. He doesn't know which drug is going to become a blockbuster. So all that they do is when those pharmaceutical companies that we know and love, like Johnson & Johnson, Merck, Pfizer, Sanofi, one of those companies, when they get cheap enough, then you just buy them and hold them. And eventually they're going to have their blockbuster drugs and have a really good return. But yeah, let me look up Merck real quick for you. They dropped a tad. I had sold them in the 90s because I thought they were a bit overvalued. But yeah, still Merck is solid. So here, let's take what does Ian Lopik say? Here comes Merck on the screen. All right, let's see. God bless Ian Lopik. He doesn't even know how many people he got into this. So there you go. Dividend safety score of 99. Let me take your comment off so I don't obscure anything there. You got me obscuring enough, right? Okay, Merck, 99, 2.84% yield, which is, we can see below their 5-year average. And oh yeah, look at that, my shares. So you can see I'm a Merck shareholder as well. I have 13 shares at $75.30 a share. So yeah, 3.88% yield. I'm up 36% on Merck. But 5.8%, 8%, they've been growing that dividend nice, 3% 20-year CAGR, 52 years of uninterrupted dividends. I believe they have Oh, look at that. March 14th is their ex-dividend date. For those of you that watch that may not know, you cannot buy on the ex-dividend date to get that next dividend, in this case of 73 cents a share. You have to own the shares on the 14th. You can't buy them. So just to be safe, and I know there's some pre-market. I think you can buy them in the pre-market. Does anyone know for sure? But just don't play around with it. To be safe, if you want that next dividend, buy and hold by market close on March 13th. You'll be good to go. You'll get that next dividend. Their dividend is currently 7% below the 5-year average. Again, just a lagging indicator, but I like to look for dividend yields that are above their 5-year average, kind of as a starting point. And yeah, free cash flow payout ratio, if this is accurate, 45%. That dividend's not going anywhere anytime soon. And as far as an intrinsic evaluation on Merck, what the hell is MAR? That's because you're singing, guy. Where are you coming up? Walmart. You can do it. We believe in you, Alpha Spread. Here we go. Come on. I'm plugged into my router too, so this is craziness. Here we go. $108.81 is their intrinsic valuation. And on the base case, or the bear case, excuse me, $84 a share. So that is Merck. And again, also one last thing I'd like to add about the intrinsic valuations. There is no specific number. It is a range. I always say it. It's like knowing somebody needs to lose weight without knowing exactly how much they weigh. So it could be a 5% range, a 10% range, whatever you feel comfortable with, but it is not an exact number like to the fourth decimal place or something like that. I'm excited for this. Exactly, Chris. PepsiCo is Thursday. I'm going to listen to that earnings report. I don't know if I do a video. I might just do a community post and give some of my thoughts about it, what I liked, what I don't. What I'm really looking forward to is I'd like to see that they're passing through a lot of their cost, because their free cash flow payout ratio, I think, is at like 96%. But as I pointed out before, it was like, I think that's up 14% or so from the last year. I also like to look at full year. It's always beneficial to look at full year numbers, because quarterly, if you have a candy company, a lot of candy companies struggle throughout the summer months, and they really make all their money between Thanksgiving and New Year's Day is when they make all their money. So if you look at them for a couple quarters in the summer, it looks like a bad company, but you have to look at the full year to get the full picture, because there's cyclicality within the year. So just, it can give clues, what happens quarterly. But again, it's always don't overreact when something happens in the quarter is what I'm saying there. So yeah, and of course I'm holding that. And let's see. Look at this, 160 shares of Vale. Nice. Oh, dude. So here we go. Jason. Thank you. It's Jason, right? My God. I should be better with this. That's old age. Plays brain games. He gave me $5. Man, thank you. Again, I don't know. I'll sing it. I know what I'll do for you. I always say you don't have to do this, but if you must, we'll thank you. Give you the Kermit thank you. And we'll give you we'll give you a Kermit followed up by a Macho Man. So dude, thank you. I'm gonna get a few more of those. And for Shamir. This one's for Shamir, way up there in Canada. Canada. There you go. So again, man, thank you so much for that donation. I mean, I really do appreciate it. And buy something for a kid, instead. You don't have to give me money, but if you guys feel that you must give me money, I'll take it. But again, thank you very much. That is very, very kind of you. Thank you. Now let's see. Look at this. Board Retiree picked it up really cheap, up 145%. Dude, nice. That's brilliant. Brilliant. I don't want to get caught up here. Holy cow. Dude, where does the time go? This is nuts. He got Simon Property Group cheap. Man, I screwed up on Simon right now. I I wanted to move. That was my last REIT that was in my taxable account. And if obviously REIT dividends are non-qualified, meaning you're going to pay your ordinary income tax rate on those dividends. So I only had 10 shares and I sold them at 116 and change, moved that money to the Roth after the first of the year. And I was like, I'm going to set it at 115 to buy in just a little bit cheaper than I sold. And I had my cost basis was in the 80s. Stupid. It was going toward 115 and it might have touched. And I set it to like 110 because I was like, yeah, I'm going to get it cheaper. It's at like 130 something now. So I'm hoping it comes down, but I'm still holding, patiently waiting. I'd like to get more of Simon Property Group. I talked about price anchoring. So Casey says, never looks at the brokerage screen, and when she buys, does it in the spreadsheet first and then just enter the orders. That's probably better. It's hard for me to average up. Thoughts on JEPI, Caleb? I know that's the covered call ETF. My thoughts are, I don't understand it well enough. I'm a little bit skeptical because I know it's newer. I know Ryan's done a bunch of stuff on it. But that's where they're getting a lot of the extra yield that they pay, because none of those companies pay a high yield. I think it's like 10, 11%. So I'm not invested in it. I would prefer SCHD. That's me personally. Why am I going to get canceled? What did I say? I don't even remember. It's a bomb. What did I say? What did I do? I don't know. Calling him short. Who did I call short? Yeah, Cody, that's funny. Do you hear that? Harsha wants a meetup. You up for that, man? I know you're in the Chicagoland area. I don't want to give away too much. I know you want to maintain your anonymity. Let's see. Casey's hey, I'll drink to that. I'll drink some tea to that. So she won't do it. She won't do it. I told her, just go incognito. We could just have your voice. I don't care. Use a robot voice. I mean, what do you mean a meetup, a live broadcast? So do you mean like I invite a bunch of you guys to chat like meetup? I don't know. Yeah. So Casey is saying she wouldn't do it. Yeah. And I did read the Essays of Warren Buffett. Fantastic book. Highly recommend it. Yeah, Intel, man, I'm stubborn. I don't like to sell for a loss, even though sometimes that's the right maneuver. But on Intel, I'm going to hold and collect the dividends. They have enough cash on hand to pay that dividend. I think the dividend a year is like $12 billion. I want to say they have 24 billion of cash on hand. So I believe they can just pay the dividend for the next couple of years. I don't think they're going to increase. They're going to just keep it frozen. But honestly, sometimes for the health and survivability of the company, the longevity, cutting that dividend just would make sense, and just plow it back into paying down debt, research and development, doing what you have to do. But they don't want to do it because the share price would get just clobbered more than it is now. But you know what? That might be the right move for the company. So we'll see what they do. It's interesting. None of us have seen this movie before, which makes it great. Margins on the revenue isn't that high at MCD. Yeah, but still a good company, man. They're, just not going anywhere. They're not going anywhere. Oh, he keeps asking about DNUT. What is isn't that Krispy Kreme? I'm not going to put it up. I'm not going to throw it up on the screen, but DNUT. Yeah, it's Krispy Kreme. They do pay a dividend though. It's smallish, 1.09%, and their $12 a share is Krispy Kreme. Harsha sold out of Merck, holding Gilead. Nice. Yeah, I sold Gilead because I have them inside of, I don't remember what, but I did a stock overlap spreadsheet. Let me get caught. I think I got caught up. Sweet. And I'll put Harsha on. Harsha said, healthcare stocks will be under. Are you in the healthcare industry, or did you just read a lot, Harsha? Like, you seem to know quite a bit about healthcare. I'd love to know. Medicare cuts and prescription drug reform profit margins will dwindle down. Yeah, that's what I'm worried about. Again, we don't know what's going to happen, but that's something that is definitely a concern with all the medicals, all the healthcare, health insurance stocks. And I know that they want to reform the pharmaceuticals because they think that they're making a killing, but I think that they're just going to start the price out higher because they can't. I think that they'll find a way around. They're going to find a way to get their money because it's like that double-edged sword. Though we need a lot of these well, I know there's a lot of I have some relatives that are very holistic and don't believe in big pharma, and I think there's some validity to that. But at times, I mean, when a lot of holistic people need big pharma, they go to big pharma. So I don't know, that could be a tricky thing to get into, but yeah. Buy more Merck tomorrow. Kevin is nice. Yeah, I think they're inside of SCHD, right? So I don't remember. I should know off the top of my head. I thought they were a top holding in SCHD. Yeah, I was gonna say maybe we could look real quick for if you guys want to. I think the quickest way I could look at this is maybe I'll bring you over to Seeking Alpha. And by the way, remember that Dividend Fireball spreadsheet. Check it out. Play around with it. Maybe you get an idea out of there down below. And I'm just looking here really quick on SCHD. Their top 10 holdings. Yeah, Merck is their number 1, 2, 3, 4, 5, 6, 7. Number 9 holding is Merck inside of SCHD. So yeah, that's something I've also looked at, is why I've been selling stuff like Merck and putting it in SCHD, especially when the yields are similar. I know there's an expense ratio to pay with SCHD, but dude, we're getting 100 companies, great companies, all in one shot. So one shot. Let's see. Yeah, reduce healthcare. Healthcare costs are crazy. My wife had that procedure done, and our out-of-pocket is quite a bit. I was like, whoa, what? Why do we have health insurance? Like, how much would it be without health insurance? Probably lose the house. You're right. Depending on Keytruda, that's Organon. What happened with it? That was the women's health company, right? Organon. I had received those shares and then I sold them. I haven't kept track of Organon, but the patent cliff with Merck. I know J&J is facing it with Stelara, right? That patent cliff's coming up. AbbVie with Humira. Merck with Keytruda. Those are some of the big ones, the rock stars. Let me see here. I'm drinking out of my dad mug. All right. Chris wants to look at CMI and SNA. All right. I'll just do a really, really quick. We'll just look at the price for CMI and SNA. Get that for anybody who's watching. I'd love to buy more Snap-on. I really would. Cummins, CMI? Yeah, Cummins. Let's see. All right, Cummins, we got 287 intrinsic value. So they're saying about 11% undervalued. And 182 is the worst case. Remember, some investors, super investors, love to buy 10% under the worst case. And if we look at Snap-on, Snap-on has got 225. So it's about 12% overvalued. And the worst case is 178. Man, if I saw a Snap-on at 178, I'll be loading up. Trust me. I'll be loading up around 210. So yeah, that's Snap-on in that. Donut. Yeah, that's Krispy Kreme up 22% this year. Interesting. Let's see. Yeah, I've never, well, the older I get, the less of a sweet tooth I have. I always say, like, sometime in my, I don't know, late 20s, my sweet tooth morphed into a beer tooth kind of thing. So KHC, Kraft Heinz, they're not going anywhere solid. I don't think, I know they had some issues, right? Where did they cut the dividend a bit ago? I'm not going to throw it up. So I know they had a spin out. Yeah, dividend growth has not been very, very good. It's been frozen. The dividend's been frozen at 40 or $1.60 for since the pandemic started. And they did cut it in 2018, and it's been frozen ever since. So, free cash flow payout ratio 55%. I think it's going to be frozen there. But if you are a dividend growth investor, probably better options than Kraft Heinz. And let me get to the end here. Katie, Swick, that Stanley Black & Decker has been running lately. Yeah. Good company. I think they'll come back. I think they're going to be okay. AbbVie has successfully negated patent cliff with Humira. Organon has done well for me. I kept those spinoff stocks. Yeah, and for those of you that AbbVie was the spinoff from Abbott Labs, ticker ABT. Abbott Labs, right? Yeah. Let's see. I don't know what Miley is. I don't know. What's Miley? Did I say something about Miley? Cody? I don't remember. Let's see. Restructuring, new leadership seems to be working. So Kraft Heinz seems like a bit of a turnaround maybe then. I don't know. Yeah, I love it. This is great. SCHD is hard to beat. You get Merck. You own less of it. Exactly. Yeah, 0.06% expense ratio is super, super small. It's why a lot of my overlap. If any of you guys missed this, I did an overlap spreadsheet because I have the 3 accounts. I have a couple Vanguard mutual funds like VVIAX and I think VGIAX. And I just started noticing that there was a lot of overlap. So just easy, sell those positions, just buy more SCHD. I just love how it's constructed. And it's hard. And it's hard to say that as somebody who loves buying individual companies. It just makes it easy. And I'm looking at it with Texas Instruments, right? Because I think here, I'll just pop this on the screen and then we'll see where we're at. But with SCHD here, and let me blow this up a little bit. The top 10 holdings, Broadcom right there. Verizon, Texas Instruments is number 3. I'm not blocking it. Home Depot, Cisco, BlackRock, Lockheed, Coca-Cola, Merck, IBM. PepsiCo used to be in those top 10. But yeah, I mean, currently paying out $2.56. Just look at those top 10 holdings. Super solid. This is why I'm not as worried about not owning Home Depot outright. I would love to, but I still have exposure to all these great companies. So that is what makes SCHD so darn attractive. And yeah, a lot of love for SCHD. So what is that? Schwab has a donut. What? Do they? No. Oh, Schwab. Oh, I thought you said SCHD. I was going to say SCHD. No, they didn't put Krispy Kreme in SCHD. Yeah. All right, guys. We'll end it there with SCHD. Dude, this time goes by quick. I'm going to finish as soon as I'm done with this live stream. All right. I'll answer this for you, Jesse. What is my biggest risk play currently? It's going to be Intel. Actually, 2. I would say Intel and IIPR, Innovative Industrial Properties, because Innovative Industrial Properties, in a nutshell, if I can explain this really quickly, what they did is they did a sale leaseback. So they would buy space from operators, and then they would lease it back to them at a really high rate, which is they're getting their invested capital out of their rent, to put it that's the simplest I can put it. So this is why when there's a risk of default, they are risking losing their invested capital, and they're not going to be able to rent out the space at an exorbitant square footage amount. So this is why a lot of investors, when they start to see those tenant troubles, a lot of investors are like, yeah, I'm out, because it's really risky what they've did. And they kind of need the tenants to pay the full lease every year for those 15 years or however long it was to get all their invested capital back and have it be profitable. So it's pretty risky, and that's one. So I would say Intel and IIPR are probably the two biggest risk plays. And yeah, that's what that is. So la 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 la. Let's see. Can I make it go back to 66? I'd love it. So if it's SCHD goes to 66, I'm gonna buy more there. And lastly, Be Still. What's up, Be Still? Nice to talk to you. Are there any special tax considerations to hold Rio? I believe that there would. Let me put that in. Simply Safe is pretty good about telling us that. And as I look here, let's see, payment details. It is a qualified dividend. So from what I'm seeing is that there is not, it's just taxed at your qualified, it's taxed at your long-term capital gains rate. So as long as you hold it for 61 days. So according to Simply Safe, Rio's dividends are indeed, there's no special tax considerations. So I think that's going to do it. And you know what I love to end with, guys? So dude, leave a comment, come back next week. Thank you for hanging out with me just a little bit, and, share ideas, whatever. Email me, Russ at Dapper Dividends. Talk to me on Twitter at RustyRam78. And I love you guys. Thank you so much for stopping by. And thank you, Jason, for the donation of the $5. I really do appreciate it. So long, everybody.